Thank you for joining me here at Phil's Gang. You know, the question I'm getting is, what is the market going to do? What's it going to do? Especially now, because the market's rolling over. Inflation's getting higher, and rates aren't going to be cut. Instead, there may be a rate hike. So let's go and take a look at the chart. Okay, in October, remember, when we hit this rally in October, before that rally, the market was ready to collapse. Everybody felt that the market was going to go down at least 60% from here. Because remember, the rates started to go up from 0 to 5% in May of 2022. And in October of 2023, they're still going up 5%. That's not good. So how'd they get the market to rally instead of to fail? They created a fake narrative. Who's they? The fake business network and Powell, that they were going to cut rates, that inflation was coming down. Inflation is coming down. They even sent Aunt B to the Congress to tell Congress inflation was coming down, Yellen. And they bought into it. The Congress bought into it. So here's what happened. So the market starts rallying. Are you kidding me? With rates from 0 to 5.3%? Rally, then all of a sudden it stopped. Why? Because we knew that wasn't true. And the big institutions started to figure out, wait, this isn't true. Smart money figured out this isn't true. They're not going to cut rates. Rates are going to have to go up because inflation's going up. And here's why. If you take a look at the inflation chart, and remember, Yellen was lying to Congress. You go back to January of 2023. So compounded inflation rate since January 2020 is 25.3%. 25.3%. Are you kidding me? That's why, at the same time, the rally that started in October, here's the market going this way. It's ready. The market was going down, and it was ready to drop big time because of the interest rates. Instead, it turned around and went up. How could it go up when rates are going up? Simple. Again, you just lie and say there's inflation's coming down. Well, you can see it's not. So the market started to drop, started to pull back about 5%. Now panic set in because at 5-6%, if the market, the spiders dropped through that point, it would trigger a lot of stops and the market would go down big. So they started to create stories to rally the market back up to stay away from this area here. Like, oh, did you know that they're going to start cutting rates again because manufacturing is in a recession? They're going to start cutting rates. They started with that again. Oh, did you know the S&P is going to report next week and 40% of the stocks are going to report and they're all going to beat expectations? Well, they always beat expectations because it's their own expectations. Unbelievable. So the market rallied. But then what happened? The market dropped 700 points. What? Why? Because the GDP came out. It dropped from 3.3% to 1.6%, which meant that the inflation of 25.3% was true. So economic growth stopped, it dropped, and also inflation, price inflation went up. The biggest gain in 1 year. Biggest gain in 1 year. Wow. 3.4%. Consumer spending, they're getting choked. Though consumer spending, 92% of consumers, other than staples, stopped. They stopped buying durable goods, anything but just staples. So consumer spending dropped from 3.3% to 2.5%. So here we are. GDP drops from 3.3% to 1.6%. Inflation on prices go up 3.4%. And consumer spending goes down from 3.3 to 2.5. And you're going to have a rally? What are you, nuts? And consumer debt is the highest in 200 years. And savings is the lowest. Because remember, savings dropped from 33% during COVID. They saved a lot of money because of all the moratoriums. They'd have to pay their car payment, they have to pay the rent payment, they have to pay anything. But now savings is down between 2.1 and 1%. Oh, and by the way, stagflation hit us this week. Because what is stagflation? Slow economic growth. Well, you saw our GDP drop. High prices. Well, we got the price inflation. And then remember, that is going to cause layoff. Because when consumers stop consuming, they don't buy. I mean, when they stop consuming, they have to get rid of the help. That's the first thing they do. Corporations get rid of labor when consumers stop consuming. So that is stagflation. Also, trade deficits. So what are they doing? Take a look. So that's why, again, they created stories to try to push the market back up. It's not working. And here we are today. The market's back down today, 450 points on April 30th. So what's going to happen? Well, the market has always been driven by debt, printing money, increasing the money supply. Remember, our whole stock market went up since 2009 on a credit card, not earnings. Remember, QE, zero rates, inflation, okay, also was created because when you create that kind of money and you print that kind of money, remember, that causes inflation. When you are spending more than you're taking, that causes deficits. You got to pay deficits, and when you're paying deficits, you got to print, and when you print, the dollar goes down. So we're in a mess. So right now, the market is in no man's land. There's the high, there's the low. So the market is either got to run back up here, and their target, you watch this target, it's right there at 520, right around 520. That's what they're going to try to do, push it up there. And we want them to push it up there. Why is that? Well, if they push that up to 520, it will fail. And that's when you get the big sell-off. Right here, see? We should have had a 30, 40, even a 70% sell-off. But that will happen if it takes this guy out right here. Because once they push it up, they can't get through, and they're not going to be able to. Panic's going to set in when they take that low. So why don't you do this? Why don't you follow me for the next 10 days? It won't cost you anything. That's right, the gang membership's free for 10 days. Also, you can follow us on our gold. Our gold, we're up over 10 to 15%, our gang members. So now gold, this was interesting today because gold went down a little bit today because they created another story. They said, oh, the Fed tomorrow, they're going to raise rates. Now, why do you think they did that? They did that because by creating that rumor that they're going to raise rates, they knew gold stocks would pull back and the institutions go in and buy gold stocks at a discount. Now, I could be totally wrong on that. We're going to find out quickly. Because, again, gold, I believe, is going to be the big winner here. We're in what we call stage 3 in the market. That's the peak. That's the most dangerous area in the market. That's where everything starts falling apart, just like it did in 2008, 1987. So join my gang, free for 10 days, and you're going to learn a lot during the next 10 days. So just go to my site, philsgang.com, and all you have to do, again, is click the link to my bio. We'll see you on the charts.